there's this ongoing demand that's not retail that's still piling into crypto week on week. I think if we look at even the Bitcoin ETFs, there's only been 1 month where the flows have been negative this whole year.
Larry Ellison overtook Elon Musk as the richest man in the world, and that's because Oracle, its stock, went 46% in one day. And this is on the back of OpenAI signing a huge 5-year deal for them to buy $300 billion worth of computing power from Oracle. Hello guys, welcome back to another episode of Tapping Into Crypto. I'm joined by the one and only Pavrigo Hundal. Pav, how you doing?
I thought you were going to say Daniel.
No, Daniel is our producer, but he doesn't get a shout out because he's behind the camera, but he's doing God's work, so thank you, Daniel.
He is doing God's work. Thank you every day, Daniel.
And thank you, Pav, for just existing.
Mate, no worries.
Because I enjoy chatting on podcasts with you.
And check it out.
And you got a sheet of paper. So we've really got paper printout.
Well, I was saying to Ted, I just feel a bit weird having my phone out. And for those avidly watching, which is very minimal of you, my bank card was on the back of my phone. I was like, probably shouldn't.
Yeah,
shouldn't
true.
Advertise that.
True. Yeah,
they'll be disappointed.
I did try and jot down the numbers.
Well,
but
you could.
Yeah.
Anyway, what are we talking about?
All right, so big week. We've had a lot of green in the altcoin market, so we're definitely going to unpack the top movers and narratives happening there and why.
Yeah, we have some good stories there.
Yeah, big time.
I'm pretty keen on that.
I think the big focus on today's episode will be when top. Last week we touched on a little bit why, the top of the cycle could be this year. Traditionally, historically, that's what we've seen. Mm-hmm. But we're also going to look at the other side and
what are the
see,
counter arguments.
Yeah, the counter arguments.
Yeah.
Will it continue into 2026? Even some arguments saying 2027. So
nice continuation, because we also had that episode with Ben from Collective Shifts. So if you didn't check out that episode, we talked about a similar topic and his strategies and how we're thinking about the market too. So so I thought I'd just mention that.
Absolutely.
Yeah.
But first of all, let's touch on some key updates from this last week. So first of all, we've seen an all-time high in the S&P 500. So that's massive. Obviously, tracking some of the 500 biggest stocks in the US stock market. Mm-hmm. So that usually bodes well for crypto because typically, if the stock market's doing well, the crypto market will follow as, capital rotates into more riskier assets like crypto.
Yep.
We've got the interest rate decision coming later this week. I think we're expecting rate cuts. Yep. So that's obviously good for markets.
Well, are they? I'm not going to talk about that today. So, but yeah.
Okay. Yeah. Well, thanks for interrupting.
No worries.
And then we've also got a new richest man in the world, really? Larry Ellison from Oracle. And
the stock went mental.
Yeah. 46% in like one day. It's like unheard of. But we're going to touch on that in just a sec and why it matters for crypto. So, big things happening. But first, let's get into the top movers. So, Bitcoin's still teetering on that 115, 116K US mark, but we've seen some real nice movements in the altcoin market. So, what do you got for us, Pav?
Well, it's actually for once different. Like we're used to meme coins, I think infrastructure tokens. I guess technically these are infrastructure tokens, but they're not an L1. So, RWAs, real world assets. If you're not sure what they are, just think about anything that I guess in the real world that could be converted into a tokenized asset. The classic one is like, hey, if you had like an ETF or even assets like property, commercial property, the idea that you could fractionalize that and turn it into, micro investing for people who can't access things like property right now to get exposure and growth in that sort of industry and sector. But anyway, projects like Mantle, Avantis, Plume, which, spoiler, I think we are listing on SwiftX quite soon.
No, it's already done.
Is it already done?
Yep.
There you go. Basically putting in huge gains. So I'll read them out. Avantis is up 300% in the last 7 days. This is again at the time of recording. Today is Tuesday. Mantle is up 35%. And Plume a respectable 18.05. But the key thing for me here is like we're obviously seeing the market show a change in character in terms of its preference on where it wants to put its money. So I think that's really cool. Finally seeing the market start to do something different.
Yeah, massive. And I was looking for reasons that why, sort of this narrative is playing out. There's a lot of focus on stable coins in the US. Tether is bringing out a US stablecoin because famously Tether is not regulated in the US or USDT in this case. So they're going to bring out another stablecoin.
Yep.
And then, we're seeing lots of conversations happening around regulation. The strategic crypto bill in the US is happening. So typically those are tied with that sort of real world asset sector.
Mhm.
But interestingly, just overnight, Bloomberg has reported that BlackRock, the world's largest asset manager, is going to start exploring tokenized ETFs, which is sort of the first of its kind, right? So if anyone that doesn't know, ETFs, exchange traded funds, it's typically a basket of assets, and you can purchase them via, an equity or a security on the stock market, right? Why this is big is because they're going to bring ETFs on chain. So on the blockchain, basically investing, in an ETF via a decentralized network. So BlackRock kind of proved and showcased that, tokenized funds can be worth billions of dollars and, very attractive for both investors and, alike. But, and that was through their BIDL fund, which is basically tokenizing treasuries and bonds and bring that on chain. So that was kind of like their pilot. Treasuries are very, low risk, same with bonds. And it was a successful product. That was called BIDL. But now they're exploring ETFs, so you never know. And typically when we have big news that falls within a narrative or a category, coins within that narrative / category do exceptionally well, like we're seeing today.
I agree. And we've always, like I sort of said in the outset of that, like we've all talked about tokenization of real estate and stuff like that. It's always sounded like a little bit janky, like it was never going to work. But this seems to me like the path of least resistance, because there's ETFs out there that'll get you exposure to, emerging market housing or just emerging market corporations, even private credit markets. So, where you might only get 3 or 4% from your bank, if you go and basically put your money with someone else that's, like private credit markets. So let's think about a credit card. So, you pay that 19% interest rate or whatever. There's always another person or party on the other side of that that's giving you the money to go spend on a credit card. Usually can be someone like an ETF that provides that liquidity backing. So that's when you get like your 8 to 9% returns.
Yeah.
And so imagine that like in DeFi land, your counterparty is the government or some company in the real world. It's not some faceless DeFi organization, which a lot of people understandably aren't too comfortable with. So it's actually really, really cool, I think, this movement.
Yep, absolutely. Yeah. And then another one we're seeing is meme coin launchpads.
Yeah, so Pump.Fun, I think we were tracking it quite a bit a couple of months back, how Bonk.Fun was overtaking it in terms of revenue and market share, whatever have you. But they've recently announced some key changes to their tokenomics and reward structures that's basically looking to reward creators very similar to Twitch. If anyone's familiar with Twitch, it's like a streaming platform where you get basically paid to drive engagement on the platform, which seems to be quite successful. It's helped a lot of creators just earn another source of revenue, and as a result, we're seeing content streamers actually move to Pump.Fun quite a bit. So I think that's an interesting mechanism. Yep. But we're also seeing them extend buyback mechanisms. So in July, they basically vowed to throw volume and revenue back into the platform. So they're still remaining committed to that whole idea as their network's gotten busy. I think it's even reported 99 to 100% of their revenues going back into buybacks. Okay. Another token that's done this very successfully recently is Hyperliquid, the trading platform. So they're basically doing the same thing. All the revenue they're throwing back into their coin. Yep. So yeah, that's what I guess.
And that's just a good sign for longevity. Like these guys aren't trying to make a quick buck. They're looking in the long term and trying to make a thriving ecosystem, right?
Well, yeah, like the narrative we're all used to is like, hey, asset goes up and all the people on the inside sell because obviously they haven't bought it for nothing. Whereas, yeah, it's nice to see this different narrative where they're actually reinvesting back in themselves because they believe in their platform, like is obviously the image they're trying to portray there. So to call it out, Pump.Fun up 80% in the last 7 days there. And Meme Core, still that one that we spoke about last week, just trying to create a new, more durable Meme Core ecosystem. Still seeing some continuation from last week. It's up 20% as well.
Cool.
Yeah.
Awesome. Well, the last, and why I spoke about, what was his name, Larry Ellison being the richest man in the world is because he relates to this last narrative that we're seeing this week, which is DePIN, decentralized physical infrastructure, which we've touched on probably 6 months ago, but we haven't really seen too much traction in that category. Yep. But now we're seeing it. So Larry Ellison, he overtook Elon Musk as the richest man in the world, and that's because Oracle, its stock, went up, something like 46% in one day. It's
insane.
That's like Ethereum going up 46%.
The amount of money
because it's a massive asset, already. And this is on the back of OpenAI signing a huge 5-year deal for them to buy $300 billion worth of computing power from Oracle. So Oracle have data centers, which are hugely important for AI and computing power because, these AI networks need access to huge amounts of computing power to store all that data to deliver content and responses and images and answers and whatnot. And so that's massive. And obviously the stock market responded by pumping Oracle, which is now, close to being one of the 10 biggest companies in the world. And why is this important for crypto? Because this whole data center and, distributing computing power to other companies and licensing that relates a lot to this decentralized physical infrastructure, DePIN narrative or category. So the ones we're seeing that have really performed well on the back of that are Aethia, so ATH, Helium, and then Peak as well, which we've talked about before. So some of these have, I think ATH is up 40% in the last 7 days. And I expect this to continue for like the next few weeks. And I even see it like being a huge narrative playing out for, years to come, because that's not going to slow down. These data center companies are only going to get bigger and bigger the more the world adopts AI and the more the world, becomes digital as well. So massive for them. I know like Peak and Helium aren't necessarily within, they're deep in assets, but they don't fall within that sort of computing power, GPU power category. But I think it's one of those ones where, a rising tide lifts all ships, and they're all sort of lumped in under this deep in category, and so they're doing well. Peak is like a layer one to facilitate deep in applications. So naturally that's going to do quite well, and then we've seen a few others as well. So I expect that to so keep an eye on that one. We'll touch on it in a few weeks' time to see if that narrative has played out.
Yeah, keen to watch and see how these two, like it's just nice to see the market doing something different, to be honest. So it's good.
Yeah, really good. Which brings us to our big segment for this week. We're coming to the end of 2025, which historically would mean, following last year's Bitcoin halving, we would have a topping out at the end of this year. That's, after 18 months of a bull market, and then we'd have like a prolonged bear market, right? Historically, we'd see that. But this year, and particularly the last 18 months, has played out very different to previous bull cycles. And can you explain a little bit why that is?
Look, it had a lot to do with what we saw at the front end of this year. Obviously, Donald Trump's tariff and trade war just did something. Like when we look at the impact that had across markets globally, it really was akin to what we saw in COVID. So obviously massive shock to supply chains, even stifling growth across many sectors. Like it just, everything took a pause because no one knew what was going to come next, basically. What we've seen since then is things start to reopen up, risks start to go back out on the curve. And I think that kind of sets up the trajectory for like why people think this time it could be different, because, well, there's a few reasons. Like there's number one, you've got that in the background, like just something happened that the market wasn't expecting. It's had to reposition 2 or 3 times already. But for crypto specifically, obviously we've seen the legislative environment, the regulatory environment, the corporate environment, and this, I like to call it like a structural bid. Like there's this ongoing demand that's not retail, that's still piling into crypto week on week. I think if we look at even the Bitcoin ETFs, there's only been 1 month where the flows have been negative this whole year, even going through all the turmoil that we've seen, right? With Bitcoin not seeing, I guess, a pullback more than, I think it was 25%. I could be wrong on that one. But I guess it sort of sets up, obviously, this sort of interesting idea that things, again, like you said, it's the same, but it's going to be different this time around.
Well, let's go through some scenarios, right? The first one being we have a market top in Q4 of this year. That aligns with, the historical Bitcoin 4-year cycle. Outside of looking back at history and looking at that cycle, is there any reason why we would have that topping out and then bear markets at the end of this year in Q4?
From a macro perspective, like I just don't see it. We're at a higher risk of probably inflation than we are like any recession, because that's what's triggered it in the past. Like it has lined up very nicely with recessions, inflation worries, like things are just too overcooked. Basically, that's what it is. We're like in this late phase of the market cycle where, everyone has to start asking the hard question of, all right, well, things like rate cuts have to turn into rate hikes. And things like banks lending money, well, they stop lending money. And that kind of has a trickle-on effect through everything, right? Like crypto doesn't just act in this one tiny little bubble by itself. It's a reflection of everything going around. So, yeah, I guess that's my take. And the 4 years definitely been dictated by something known as like the refinancing cycle, which is pretty common if you YouTube that, just to learn more about that. And we've got some guys, I guess, takes today that sort of, subscribe to that methodology. So Raoul Pal's one of them that we'll talk about soon.
Yep. But I guess like you touched on that, we want to get some expert opinions and what they're saying, because obviously we have our opinions, but let's see what everyone else is saying. Van Eck is an asset manager in the US or the UK. And they called 180,000 Bitcoin by the end of 2025. They called that in December 2024, so it was a while ago. I guess given the time frame of that, like it's close to 12 months ago, like a lot of people would have been saying the same. And it'd be interesting to see if they change their mind, based on what's happened this year and, how the market's played out. But they're one of the big ones that called for that sort of topping out in Q4. But let's look at the other scenario. So the other scenario, we'll keep it pretty general, is a market top beyond Q4 2025.
Yeah, because it does vary what people are thinking.
Yeah, exactly. And there's a few different rationales here. But the main one is, there's a few. But institutional demand for Bitcoin is growing, and improving macro conditions will push the bull market into 2026, particularly, as things start to heat up, we get more euphoria like we've seen in past bull markets that we haven't really had this time around, which makes me think that, Q4, even if we do get a bit of a euphoric period, it's just not long enough to see us, have that bull market and then go into a sustained bear market, particularly if, macro, economic conditions are strong, right?
Yeah, absolutely.
But yeah, what do we got? Raoul Pal, a friend of the show.
Friend of the show. He was on once back in 2021?
Yeah, a while ago. We should get him back on.
Still friend of the show.
Yeah, still friend of the show. We've got his number, but we'll get him back on.
Yeah, so he's basically saying that so this is an article he did with Cointelegraph, I believe, not too long ago. Currently in a waiting room phase, which kind of is not a bad way to put it, really. I mean, a lot of people have been feeling like, when's this going? When's it going to happen? And he doesn't believe that we're close to a cycle top. He believes the bull market will continue into Q1, Q2, and 2026 because of a slower business cycle recovery. So that's, again, sort of tying into a lot of that destabilization that we saw at the front end of this year. And basically, liquidity conditions remain higher for longer.
Well, because what he's referring to here is rising ISM. So ISM is an indicator that looks at the business cycle.
Yep.
And typically when it's under 50, we see sort of, businesses are retracting.
Yep.
And when it's over 50, they're expanding, right? And for the last sort of 2 years, we've been under 50.
Yep.
Which typically means if you stay under 50, you're basically in like a period of, growth potential, right? And the longer it stays under 50, the more potential for that growth, for explosive growth, right? And so looking back at the last 10 years, we've seen ISM peak in early 2018 and March 2021. Now, what happened in those two times?
Got the peakies. That's when it all sort of topped out, right? Yeah. Yep. And that is an interesting piece, right? Because again, like we're talking about crypto not just being this little, one-man marching band. Like, yeah, definitely. Like if we do see growth across manufacturing, services, probably more so manufacturing, it's definitely showing that there's money to spend in the global economy, right?
Yeah.
So that's where this ISM sort of comes in. It's seriously undercooked still.
Well, exactly. Yeah. And I was looking at it and it was like around, 65 in those periods. So it was really high in 2017 where we had that, Bitcoin all-time high, and in 2021, another Bitcoin and crypto all-time high. So we're yet to even get close to those levels yet. Like, as I said, we've been below 50. And as we start to see that above 50, we see businesses start to expand.
Yep.
And so we're teetering on that, and we're trending in the right direction, which I see is good for crypto. And obviously, Raoul Pal is thinking the same. But he's predicting April, May, June for real significant price action in the crypto market. And he's got strong conviction on that. So it's good to hear.
And we throw it back to one of the other cases we've got for a market top in Q4, another prominent figure in the crypto space, Benjamin Cowen, into the cryptoverse, very much well known for being very mathematical when it comes to crypto markets. He's got a post here that basically says, historically, Bitcoin finds a low in September of the post-halving year, which is this year, and then bounces off it into the market cycle top that occurs in Q4. So by all accounts, if, Mr. Cohen is correct, that kind of is suggesting that we're about to put in the springboard right now in September, launch into the back end of this year, and people should be expecting, that to be it for Bitcoin. So
that kind of aligns with, the first scenario that we were talking about, which is topping out this quarter or next quarter.
And we'll include a link to his tweet so you can see it yourself. But he's got a little graphic there that shows what's happened each time in September's, similar to the one that we're in right now, just to articulate his point. So yeah.
He's probably the most significant TA guy when it comes to crypto, hey?
He's been around doing it for a long, long time.
Yeah.
And the thing with him is, once he says something, he just repeats it constantly. If you've ever watched these videos, you kind of get the gist of it.
He doesn't overhype things. His videos are, for most people, quite boring.
Yes.
But he sort of sticks true to who he, his ways and his, strategies. And you got to respect that. But back to the other scenario of the
beyond
market, going beyond, Q4 2025 is the Pi cycle top. So you know about this more than I do.
I did a write-up last week on it, so
sick.
It's funny this.
Tell us all about it.
So Pi cycle top, again, I'll check out SwiftX Learn. We'll also include a link to that, to the write-up that we did last week, but it's an indicator that it's most famously known for calling the top in the previous cycles consistently. So this particular analyst that we've pulled out, Mark Moss, again, this indicator isn't anything spooky or special. It's basically two moving averages, and they look at a very broad set of data. So when they do cross, historically it has meant a pretty monumental moment for Bitcoin specifically. So again, it's very slow moving. But Mark Moss is basically saying that this indicator is a holy grail, according to this post on X, for Bitcoin indicators that they follow. So Mark Moss, just so you know, he's a chief Bitcoin strategist at a AI company in the UK, Satsuma, as well as partner of a Bitcoin fund. So very much in the thick of it. He notes that the indicator has perfectly nailed the Bitcoin cycle tops in 2013, 2017, and 2021. And he's now calling, referencing the indicator again for a peak in Q1 2027. So that's ages away.
It's huge, and it goes beyond even the back end of the next year and into a whole new year, which is I haven't really heard too much of. But what's even more interesting is the fact that this indicator is calling for a Bitcoin price in Q1 2027 of $395,000 USD.
It's gonna be like $500,000 Aussie,
which is exactly. Yeah. And what's that from here? That is over 3x.
So it's just over.
In about, 1.5, 1.25 years.
1 and a bit years.
Yeah. What do you think of that?
I mean, I always have this opinion that every model works until it doesn't. And the Pi cycle is a pretty simple one. It is just moving averages. I don't know. I definitely, because as you're the same as well. We bought when everyone wasn't looking back in 2013 and 2023 and 2022. So, for me, it's I'd be happy even if we got not even close to that, just to at least take some profits off the table. But I think if we see opportunities to buy and the market doesn't look like it's overheated, play on. I'd love it. Yeah.
Yeah. And you were also showing me before that, because obviously this is just one indicator.
Yes.
And like you said, it works until it doesn't.
Yeah.
So we like to look at lots of indicators, whether it be, fear and greed, or whether it be, TA, it's the more information you have at your disposal, the more accurate you can be, right?
Yep.
And you've got this website that showcases a number of Bitcoin topping indicators.
Yeah, we'll include this in the notes too. But there is, like Ted said, a lot of scientific modeling behind how you can look at how previous bull markets or bear markets have been modeled. Some look like it does it to a T, but then you'll also see very quickly how some of them do it in the past but don't do it so well in recent history. But if you go to coinglass.com, there's a section called Bull Market Peak Indicators. And what it basically does for you is it lists them all out nicely for you and tells you how far progressed they all are. So right now, for example, we're seeing something like their altcoin seasonality index reaching a point where it's overheated, so suggesting they could see maybe a bit of a return back on altcoins soon. But all their other indicators still remain quite undercooked. So again, they're sort of recommending through the broad spectrum of indicators there that we're still in a more of a hold sequence than we are in a sell, any point of selling in terms of a cycle top.
Yeah, exactly.
The best way to think of this is it's almost like a composite index, it's just a whole bunch of things put together. So just another way to gauge the temperature of the market, really. When we're talking these longer term time horizon targets. So,
well, no, what do I take from this? Because it puts it out really, really simply whether this indicator has hit or not.
Yeah.
And essentially, outside of the one you said, altcoin season index, everything has not hit yet. So it gives me a strong indicator that we're not even close to the cycle top yet.
Yep.
And it kind of shows how close we are to hitting each indicator. Once we do see, ticks across, a lot of these indicators, that's when you start to, keep a closer eye on things. But this is probably positive to hear if you're, in the market right now and you're looking to, make some profit over the next few months. This is the kind of thing you want to see because it indicates that we're not even close to hitting that top.
Absolutely.
So, yeah, I think it's a great site. We'll definitely
enough to take us to 2027, Bob. All right.
I don't want to make a call that big, especially going against the great man Raoul Pal. But who's to say that it can't happen? Because it's if we have a cracking 2026 where just everything is heading in the right direction. From that was it LSM indicator showing that businesses are expanding.
ISM. Yep.
ISM. Sorry. Rates are coming down. The macro conditions are strong. Geopolitical conflicts are, minimal.
Hopefully, yeah.
You never know. Like euphoria can just go to new, crazy lengths. But obviously, what goes up must come down.
Yep.
So don't think it's going to go up forever. And also, even if you think it's going to go up more, always note that taking profits is why you're in here. So take profits at certain milestones.
Yeah, you're not here to donate to everyone else.
This is true.
Yeah.
Unless it's to me and Pav.
Unless it's, we'll do that for you. Yeah, I think there's another quote that we have here from Arthur Hayes, who's quite a prominent voice in the space too. I'll just read out the quote now, but it's like, if you thought you were buying Bitcoin and the next day you're buying a Lambo, you're probably getting liquidated because it's not the right way to think about things. Bit colorful as always. He's a bit tongue in cheek, but again, like we're talking about the industry maturing. Like I think everyone has to change their lens on what's their plan for the next 10 years, not how can I get rich in a year. I just think that's just where we are right now for crypto.
Yeah, I used to always have these, like, just a bit of a, off-topic story. I used to always have, when I first got into crypto and I was buying things for the first time, I used to think like, oh, once it gets up here, I'll have this much money. And you just, you get that sort of boost of serotonin or whatever it is and that euphoria and you're just like, oh, the what if or what could be. And just like, I now don't get that because I've been in long enough to understand that, the market is not here to make people all billionaires. Like no market has ever operated like that in history. So you kind of got to be sensible about it. And if you do get those spikes of euphoria, take a step back and think, okay, what would a logical, analyst think right now? And what are the indicators saying? And don't get too emotional with it.
Yeah, absolutely. Couldn't have said it better, mate. I'd finish up on one point. As much as people are talking about Bitcoin tops, if you actually go back and look at everything that's happened in the past, a lot of, let's call it when things just go accidentally right for people, like we're talking about investing in altcoins, we'll be talking altcoin season next, right? It all comes after the tops put in. So Bitcoin topping out, it's the start of the end, but it's also the start of many other opportunities opening up. If you're ready to, again, if you've taken profits, you've got capital ready to redeploy. Because we saw all of NFTs, we saw meme coin craze last cycle. That was all post Bitcoin having its sort of big sort of moment, putting in its highs last time around as well, and the time before that. So, yeah.
I'm sure we'll see it again.
Exactly, right? So, yeah. It's more to it.
The mania of an altcoin season.
Yeah.
Cool. Nicely said. Thank you, guys, and we'll see you next week.
Thank you.